Now, whenever we talk about banking crisis, anywhere in the world or anywhere in India, it's the lives of the common people which comes to our mind. Whenever a bank collapses, or whenever any bank, big or small, collapses or goes into a crisis, the people, the common people who have deposited their hard-earned money in the bank, their money is at stake. It's not actually the bank's money, but it's the public money which is lost and the public's trust which is eroded if it comes to a crisis. And today we'll talk about one such bank, that is New India Cooperative Bank, which is having allegedly a fraud of 122 crores.
At New India Cooperative Bank.
And because of which the amount of several lakh depositors is at stake. And several lakh depositors, they are waiting outside the branches of the bank to withdraw their money. In economics, we call it as bank run. Now, bank run is a situation where many individuals, many depositors of a bank, they simultaneously go outside the bank wanting to withdraw their money. In this situation, bank comes to a problem, banks comes to a standstill and crisis because bank is not having all the money with themselves at that point of time to give back to the depositors. Because essentially what banks do, banks take money from the depositors and loan it to the borrowers. In actuality, bank is having very less amount of money. So this whole system, which is based on trust, it gets faltered whenever any such news of crisis comes into play. And one such bank which we are talking today about is New India Cooperative Bank Limited, which is currently in crisis. Now, RBI has superseded its board and has appointed an administrator for the bank for an year. And this happened on February 13th of 2025. Now, what this whole crisis is all about? Why cooperative banks in our country, first of all, what is cooperative bank? Then why cooperative banks in our country are facing these kind of issues? And what are the possible solutions and what are the possible learnings from this fiasco? All these things we'll be trying to understand in this particular session. Hello, my name is Preetpal Singh and you are watching Perspective. So let's start from the very basics. RBI, Reserve Bank of India, is the central bank of our country. It's the facilitator and the regulator of entire banking ecosystem in the entire country, whether it be cooperative bank, scheduled bank, non-scheduled bank, commercial bank, local area bank, regional rural bank, any sort of banks you take up. The administrator and the regulator of the banking system is RBI. Now, very recently, few days back, RBI has imposed severe restrictions on one cooperative bank, that is New India Cooperative Bank. And they have issued restriction or imposed restriction on issuing new loans, accepting fresh deposits or allowing withdrawals for the next 6 months. And while doing so, central bank has cited governance related and financial instability related issues as the primary reason behind putting this restriction.
The RBI today has imposed severe restrictions on New India Cooperative Bank, including a ban on withdrawals for 6 months due to concerns over the bank's financial stability.
Now, definitely as expected, this move has triggered panic amongst the depositors, and many of whom are concerned about their hard-earned money, which they have put in the banks. Now, as I've already told you, that an administrator has been appointed to overlook the operations of the bank for the next 12 months. Now, there has been a committee, a 3-membered advisory committee being formed to set up and to assist the administrator in making the transaction smoother and making the bank come up and revive again. Also, one positive thing is that the depositors are eligible to claim up to 5 lakh rupees under the Deposit Insurance and Credit Guarantee Scheme, that is the DICGC scheme. But the real question still remains that why actually RBI has taken this decision. Now let's understand it in a very detailed way. So this bank, it has been embroiled in irregularities and embezzlements since last few years. There have been several signs of weaknesses, making losses for the last 2 financial years where they posed the loss, this bank posed the loss of around 23 crores in the last year, that is the year of 2023-2024 financial year. Also, several fraudulent acts combined, it culminated into this crisis. And the fraud actually occurred from the year 2020 to 2025 where lenders book, they were found with several financial irregularities. And because of that, RBI took prompt corrective action PCA for this particular bank. So there are around 1,30,000 customers, 1,30,000 depositors for the bank. However, one positive thing is that 90% of the depositors, their deposits are secured. But what about the rest 10%? Don't they deserve their deposit back? Or is their deposit worthless? What needs to be done? That is the question. This particular incident, it reminds of a saga which happened few years back of Punjab and Maharashtra Cooperative Bank. If you remember, this happened in the year 2019. The customers also, again, a bank run could be seen for this bank where customer ran to the branches of the bank to get their money back and subsequently it had to be merged with Unity Small Finance Bank. Similarly, this New India Cooperative Bank, it is facing the similar situation in the exactly same way. Now, while RBI's decision is definitely in the interest of protecting the New India Cooperative Bank and to ensure that the depositors, they get their money back and the depositors are not harmed in any which way or manner. But the collateral damage done by this crisis is very huge, particularly to the cooperative banking sector of the society or cooperative banking sector of the whole country, which serves millions and millions of low-ticket individuals or low-ticket account holders, many of whose livelihoods could be hooked to such banks because they are putting each and every penny of their savings into these banks. So which means the question at large is at the cooperative setting, the cooperative banking societies, the cooperative banks of the entire country than just this one bank. So before we move further, firstly, what we need to understand is what is actually a cooperative bank. Now, cooperative bank is a cooperative society which is either registered with the State Cooperative Banks Act, that is State Cooperative Societies Act, or a Multi-State Cooperative Society Act of 2002, engaged in banking businesses. Basically, a cooperative bank is a cooperative society registered either with the State Act or a Multi-State Act of 2002, which is engaged in a banking business. And in India, cooperative banks can be divided into two categories: urban cooperative banks and rural cooperative banks. Now, rural cooperative banks or rural cooperative credit institutions, they can further be divided on the basis of time period into two. One is short-term structure, another is long-term structure. Under short-term structure, there is further categorization of a rural cooperative bank. So one is state cooperative banks, that is under short-term structure, first part. Second is central cooperative banks. And the third one is primary agriculture credit societies. So all these three are under short-term structure of rural cooperative banks. And then there is long-term structure as well. There are also certain other divisions are there. But whole in whole, one thing which we have to understand is there are urban cooperative banks and rural cooperative banks. Now this New India Cooperative Limited, it's a urban cooperative bank. Now these cooperative banks, they are not owned by a single individual. They are owned and operated by the members who are its customers. So it's basically decentralized. Members usually in a cooperative bank have equal voting rights. And according to the cooperative principle, which is one person, one vote, which is very essential in the cooperative society and cooperative banking. And the objective is very clear: to provide financing to rural and urban individuals, localized financing, and also to provide a microcredit. That is targeted financing, microfinancing, primarily which supports different sectors like agriculture, small-scale industry, and self-employed individuals and businesses as well. Now, what we actually need to talk about is the regulation, because this is where the most of the criticism lies in. So cooperative banks in India, they are under a dual regulatory framework. If we talk about urban cooperative banks, to be specific, so the banking functions of the cooperative banks, they are regulated by the Reserve Bank of India, that is RBI. So they are regulated under the Banking Regulations Act of 1949. But there are other functions, other oversights, like managerial oversight. Now, managerial oversight to cooperative banks is done by Registrar of Cooperative Societies of that specific state. That is a dual control system. One, RBI is overseeing the banks, cooperative banks. On the other hand, RBI is overseeing the banking function. And the managerial function is seen by Registrar of Cooperative Societies. So basically, Registrar of Cooperative Societies under the central of the state government. They include areas of incorporation, registration, governance, audit, board supersession, and liquidation of cooperative banks. All these things comes under the Registrar of Cooperative Societies. And under RBI, all the banking functions like what is the capital adequacy, what is the deposit, what are the loans, what are the lending norms, what are the financial regulation and supervision, all these things are taken care of by the Reserve Bank of India. Now, this dual control of the cooperative bank makes it very difficult for cooperative bank to run smoothly and efficiently. So in this one function itself, you can find very, very big loophole. Now, RBI has been regulating cooperative banks since March 1st, 1966, when the Banking Regulation Act of 1949 was amended to bring the cooperative banks under the ambit of central bank. Now, as of March 31st, 2024, there are around more than 1 lakh cooperative credit societies or more than 1 lakh credit cooperative banks in the entire country. Very few of them are urban cooperative banks, more are regional cooperative banks, and maximum more than 80,000 are primary agriculture credit societies. And while we are covering all these things, what we need to also see is that what are the key issues for urban cooperative banks. One key issue already we have seen, dual regulation. Second key issue is relation to low capitalization. Now many urban cooperative banks, they suffer from low capitalization, low capital adequacy, making them more vulnerable to financial shocks. That is first thing. Alongside this also, there is governance concern. Because of regulation not being proper, there are cases of fraud, mismanagement, a lot of things which are adding to the fuel for depositors' anxiety. And amongst all of these things, the ratio of non-performing assets, NPA, for urban cooperative bank is also higher. So high levels of NPA for cooperative banks, they definitely erode profitability and also weaken the financial health of urban cooperative banks, which eventually is what happens. Of all these things, definitely if one urban cooperative bank is not performing well, comes into a crisis due to a fraud of hundreds of crores, due to a fraud, if such crisis emanates, definitely collateral damage to the ecosystem of cooperative banking in the country would be huge. But does that mean that RBI is doing nothing? No. RBI has taken a corrective action here also. Now RBI is having a policy, Prompt Corrective Action PCA framework. That new Prompt Corrective Action framework, new PCA framework, that is RBI's regulatory mechanism to impose restriction on financially weak urban cooperative banks to restore their financial health, is in place. So that is one action taken by the RBI. Another action taken by the RBI is the National Urban Cooperative Finance and Development Corporation. Now this is an umbrella level corporation for the urban cooperative banks to enhance their operational efficiency. So this is again one initiative which helps the urban cooperative banks to cope up and to reduce their fraudulent activities and to reduce their inefficiencies. Also recently in 2020, the Banking Regulation Amendment Act was passed. In this, RBI is now having a power to supersede the board of a cooperative bank under certain conditions. So that is also a very good way to ensure operational efficiency. And in all this scenario, what lesson needs to be learned by the urban cooperative bank is very simple. They need to understand it and take a cue from the crisis and understand the perils of ignoring operational irregularities. So all the banks need to invest their resources properly. They need to continuously invest more resources in strengthening risk management in their organization. Also to have a robust risk management architecture to fight operational risks and to ensure operational inefficiencies are dealt with as the first priority. Also training and creating capabilities, creating compatible operational environment which is conducive to the employees with their freedom to invoke a whistleblower policy should also be in place, and which is very necessary for operational risk management. So that is also required. So integrating the risk management culture and also making the people who are working in the organization, the employees and the depositors, also making these people aware of capturing any untoward instance or anything which they find inappropriate, flag that thing immediately to the higher authorities. That culture needs to be developed in almost all the banks. Because this vigilance, if it is there, the banking system definitely can be improved as a whole. So even small size of aberrations and in banking operations, if it is flagged by the employees, it should be sensed by the employees definitely, and it should be brought to the notice of the stakeholders if required, using a proper whistleblower policy. Only then we'll be able to ensure that the money of hard-earned public of our country, it is not lost, and the public should not be running after the insurance coverage of their deposits. Rather than that, public should be at their homes at peace that the money which they had put in the bank is safe and secure and is taken care of by the custodians of the banking systems of the country. If that is because whole banking system in the country, in any country, works on very fragile thing, that is trust. If that trust or the credibility is broken, the entire banking ecosystem could collapse. So to ensure that that trust and credibility remains, all the banks needs to be vigilant, and here a very proactive role of all the stakeholders, all the regulators, especially RBI, is required. So RBI has definitely shown a proactive role in this New India Cooperative Bank crisis, but more proactive role to sense the crisis 1 or 2 years prior while the crisis is building up, to sense the crisis at that point of time and to stop the crisis then and there is what the need of the hour is. That our sensory capabilities, the banking sensory capabilities should be so sensitive that even some of the fraudulent transaction, if it is taking place, should be flagged by the system immediately. So that any such crisis which might take a shape of a very huge crisis should not develop, such kind of situation should not arise, should not come. Now I hope you gained a new perspective from this session. Do let me know what are your views surrounding this particular issue and what more could be done by the RBI or other organizations to ensure that the money of the depositors is safe and secure. All the very best and have a beautiful day. Thank you.